The finest dividend companies to buy and hold for the long term are aristocrats because they have a number of important traits. First of all, they hold positions of leadership in their sector, which ensures consistent profits every year, regardless of the state of the economy. Here are the top 15 dividend aristocrats. Number 15. AT&T Incorporated. Over 100 million households and businesses in the United States receive cellular, cable, and satellite TV and broadband internet services from AT&T, a telecommunications multinational. Since AT&T has increased its dividend for more than 30 years, income investors find the company particularly appealing because of its high dividend yield of more than 6%. The business is making significant investments in growth, like its substantial acquisition of Time Warner. Number 14. Becton Dickinson & Company. The company Becton Dickinson & Company makes medical equipment. Approximately 40% of its yearly revenue comes from sources outside of the United States, producing annual revenues of over $17 billion. In fact, the business has slowly expanded to become a titan in its sector. As an illustration, the dividend aristocrat produces more than 40 billion medical gadgets annually. Furthermore, its position as a leader in the industry results from years of significant investment in R&D to develop long-lasting competitive advantages. The business invests more than $1 billion in research and development every year, and it has paid off because BDX today has over 27,000 active patents. Number 13. AbbVie Incorporated. 2013 saw the separation of the pharmaceutical company AbbVie from Abbott Laboratories. Humira, its most significant product, will no longer be covered by a patent in the United States starting in 2023. To replace Humira, however, AbbVie has a number of development prospects, particularly in therapeutic fields of immunology, hematology, and neuroscience. Another driver is the acquisition of Allergan at $63 billion. Botox, Allergan's flagship medicine, undoubtedly broadens AbbVie's product line by providing exposure to international aesthetics. Number 12. Atmos Energy. More than 3 million consumers, mostly in Texas, are served by Atmos Energy, which distributes and stores natural gas in 8 states. In fact, distribution makes up about 2/3 of its business mix, with pipeline and storage making up the final third. Atmos Energy is able to earn a return on equity of 11.5% since it operates in a dependable and regulated sector. Additionally, client growth and rate hikes guarantee almost constant revenue and profit growth. Number 11. Johnson & Johnson. The largest healthcare corporation in the United States is Johnson & Johnson, with a market value of more than $400 billion and annual sales of more than $80 billion. Its broad business strategy and dominant position in the pharmaceutical, medical device, and consumer healthcare industries have helped it achieve this degree of dominance. The business offers 28 distinct products or platforms, each of which brings in more than $1 billion in revenue annually. Number 10. Roper Technologies. A specialist industrial corporation called Roper Technologies produces items like pumps, material analysis equipment, and imaging equipment for use in science and medicine. Roper Technologies also creates software for the water, energy, food, transportation, and healthcare sectors. Over the last 5 years, the company has produced an excellent track record of growth. For instance, Roper's revenue climbed at a 9% compound annual rate from 2015 to 2020, while free cash flow increased at a 13% compound annual rate during this time. Number 9. Lowe's Corporations. Just behind the Home Depot, Lowe's is the second largest home improvement retailer in the United States. Interesting enough, Lowe's has been raising its dividend for more than 50 years, earning it a spot on the list of dividend kings. In fact, Lowe's has more than 2,200 hardware and home improvement stores in the United States and Canada. As more individuals stayed at home due to the epidemic and the property market sustained strength, this dividend aristocrat also did quite well last year. Last year, the company's net sales increased by 24% to nearly $89 billion. A significant factor in Lowe's expansion is also its thriving digital platform. The fourth quarter saw a 121% surge in sales on Lowes.com. Number 8. McDonald's Corporation. The largest publicly traded fast food chain in the world, McDonald's has 39,000 restaurants spread across more than 100 nations. More than 90% of McDonald's eateries are privately owned and run. The recent acceleration of its franchising operations has contributed to an increase in McDonald's profit margins and overall earnings per share. McDonald's has a significant global footprint, a vast restaurant network, a well-known brand, and substantial real estate holdings. The business also does well during recessions, when many customers cut back on their dining expenses. Number 7. Automatic Data Processing. ADP is a provider of business outsourcing services. It had just one client when it was first established in 1949. Since then, ADP has expanded into the top provider of payroll and human resource outsourcing services. In more than 140 nations around the world, it has more than 860,000 customers. Companies of various sizes can use ADP's services, which include payroll, benefit administration, and human resource management. Additionally, this dividend aristocrat observes strong demand for these services because businesses would want to outsource these tasks so they may concentrate more on their core business operations. Number 6. Walmart Incorporated. Walmart is a massive bargain retailer that serves 230 million customers weekly. One of the companies that investors will find to be the most resilient to recessions is Walmart. Because Walmart concentrates on offering consistently low pricing, customers actually shop there more during difficult economic times. This resilience was on display in 2020 when the U.S. economy was severely damaged by the coronavirus epidemic. In constant currencies, Walmart's overall revenue rose 8.6% last year. In order to compete with online rivals like Amazon, Walmart has made significant investments in its e-commerce platform. Number 5. Aflac Incorporated. It is a supplemental insurance provider that offers life, accident, critical illness, short-term disability, dental, and vision coverage. Approximately 70% of Aflac's pre-tax earnings come from Japan, with the other 30% coming from the United States. The business has a lengthy history of consistent expansion. It has raised its dividend every year for 39 years in a row, including by 18% in 2021. Currently, shares yield 2.4%. As the business broadens its product offerings, including third-sector products that are becoming more and more well-liked in Japan, continued growth is inevitable. These include novel products like cancer insurance, as well as healthcare and financial assistance. Number 4. Target Corporation. Since its founding in 1902, Target has developed into one of the top bargain retailers. This dividend aristocrat runs more than 1,800 stores and generates over $90 billion in revenue annually. Target has grown its dividend for more than 40 years running. As Target stock has surged to all-time highs over the past year, shares today yield 1.3%. As it expands its digital platform, the corporation is experiencing great growth, particularly in e-commerce. Number 3. Standard & Poor's Global Incorporated. With a market valuation of more than $80 billion, Standard & Poor's Global Incorporated is a global provider of financial services and business information. The company has over $7 billion in yearly sales and has rapid expansion for several years as a result of the robust performance of the global capital markets. Revenue climbed by 11% and adjusted earnings per share by 23% in 2021. The ratings division accounts for around 50% of its operating revenue, followed by market and commodities intelligence at 30% and S&P Dow Jones indices at the remaining 60%. The need for ratings services is expected to keep growing over time. Thus, these organizations should continue to experience growth. Number 2. Sherwin-Williams. Founded in 1866, today, it is the biggest producer of paints and coatings in North America. Under the Sherwin-Williams brand, the firm sells its goods through wholesalers and retail outlets, including a chain of more than 5,000 company-operated stores and facilities to 120 different countries. For 43 years, it has raised its dividend. The stock's comparatively low current yield of just under 1% is more than offset by its astronomically high dividend growth. The most recent dividend increase, for instance, was a 23% rise in February. Number 1. T. Rowe Price Group. It is one of the biggest asset managers with a public stock market. For individual and institutional investors, retirement plans, and financial intermediaries, the organization offers a wide selection of mutual funds, sub-advising services, and separate account administration. For 35 years, T. Rowe Price has raised its dividend. It has built this reputation through holding a top spot in the financial services sector. At the end of the first quarter of 2021, the corporation had $1.52 trillion in assets under administration, an increase of 50% from the previous year. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.